Hey guys.
Hello.
Hi Shelby.
Hi, Jabin. How's it going?
Good.
Good.
Okay, so we decided to do it outside because it's so nice. Finally.
Wanted to get some fresh air.
Yeah, it's really nice.
Yeah.
Nice breeze.
Yeah, it is.
So hopefully we won't hear too much of the construction actually.
Yeah, across
We'll
the
see.
street.
We'll see.
Or
Okay.
the cars driving by.
Yeah, that's true. We'll see. We'll adjust next time.
Yeah.
So today we're gonna talk about
Mortgage insurance and life insurance.
Awesome. So that was a great question we got. So the difference between mortgage life insurance and actual like full or term life insurance that you get with your
Insurance
either
advisor.
insurance company
Through work.
Yeah. So there's different ways to get them. But that was a great question. So mortgage insurance basically it covers it'll pay off the mortgage
Yeah.
if someone like if someone dies.
Yeah,
One
if
of
they're covered under the policy, so say you and your spouse buy a house together and you guys both apply for mortgage insurance. If either you or your spouse pass away, then your mortgage will be paid in full. But it is a decreasing value. So as you pay down your mortgage, your insurance is your value of your insurance is going to decrease with that as well.
So basically, if you get a mortgage insurance right now for like $200,000, if that's what your mortgage amount is,
Yeah.
And something happens in like 15 years, 20 years,
It's not going to pay you
it's just
$200,000.
going to pay off whatever the balance is. So
Yeah.
it's declining, it decreases. So it's usually less
Yeah.
per month.
Yeah. Depending
but-
on what your age is and things
Right,
like
yeah,
that.
that's true. Yeah.
If you're
Yeah.
pretty young, you know what I mean? Like if you're born in late 80s, early 90s, you're probably looking at like $15-20 a month for your premium.
Yeah, like first-time home buyers when they're like before, like under 30.
Yeah, the
It's
premium's
like, oh
super
my
low,
gosh.
and I mean like that premium stays the same throughout the entire term of your mortgage as well. So it doesn't start to increase as you get older, and you don't have to reapply for it, provided that you don't refinance your mortgage or add more to it. Because if you do refinance, you're going to want to increase your mortgage life insurance because your mortgage life insurance will be tied to the old mortgage.
Right. And also, one thing to know about mortgage life insurance is that if you get it with your bank, like through your bank, you need to reapply if you either like change mortgage, like if you sell the house usually, or if you refinance, or if you want to switch out to a different lender,
Yeah.
you're
gonna need to reapply for it. Yeah.
So then you're older, you have to answer the health questions again.
Your premium's
So-
gonna increase. Yeah.
So what we do, we have life insurance that can be transferable. So it's not actually always. We have different ones, but the one
Yeah.
we like to use is usually the one that is transferable from one bank to another.
Yeah.
So that you don't have to reapply
When
if
you decide
ever
that you want to switch to a different
change
lender.
something,
Yeah.
so that's really important actually, because I've had clients where it was like, oh, they found that out and they're like, well, I can't, like,
I'm not gonna qualify
I'm not
for it
gonna be
now.
qualified,
Yeah.
so they don't really want to switch over, so that they feel stuck. So that's really, really important actually.
Yeah.
I like to suggest people to get mortgage life insurance if they don't have anything at
Yeah.
all.
Oh, yeah. If you don't have
or
anything,
enough.
at least get mortgage life insurance to start to pay for your house if something happens, because you never know when something is going to happen. And we have had plenty of calls from people that they've said like, look, my partner passed away, we didn't have mortgage life insurance, they were the breadwinner, what am I going to do? And that's not a situation you want to be in, especially during a time like that.
No. Oh my gosh, no. You're never
No.
going to regret having like too much insurance.
No,
or
exactly.
Or any insurance.
Yeah.
So that's what you need to think about. Like when you're like, oh, this is how much it is. Well, are you going to regret?
Are you going to regret
having
it when you need
Like,
it?
Can you afford it? Yes or no? And
Yeah.
like basically, it should be a pretty high priority. Like if
Yeah.
you're going to buy a house and everything else, right? So that's what mortgage life insurance is. Actual life insurance, that's not what we do, so we're not like expert in any means about
Yeah, we can
life
just speak to our
insurance.
own knowledge from when we got our life insurances.
Right.
But
So just to give an idea, the difference is you can get like there's a whole bunch of products. that you can get,
a whole bunch of different kinds.
with like your insurance advisor or
Yeah.
your bank or whatever.
You can get like a
There's-
lifetime, a term. You can get one that's like a return on investment, or
There's a
you get your money back or something, or
There's-
it's like a cash policy. You can take money out of it.
Right,
I don't know.
Yeah, there's so many.
Yeah.
Oh my gosh. So yeah, I don't know all of them, but so basically, like just a plain like life insurance, like compared to mortgage life insurance, is that your amount never changes. If
Yeah.
it's a full life, and that you have it like forever, the amount won't change, so you're always going to get that amount whenever, if ever something happens.
Yeah.
And then there's other like stuff that you might have added to that product.
Yeah,
but
exactly.
The basic is that. You also have the term insurance where you can get term of like 10,
15, 20 years, something like that.
And
it's a little bit cheaper for the term insurance, if
usually
I'm not
less, yeah.
mistaken. But I mean, like if you say, for example, if you're buying a house, you know what I mean, and maybe most of your expenses are right now in life because you just bought a house, you have kids, you've got a car, you've got all of this, you know what I mean? You might want to look at maybe a 10-year term insurance for a higher amount than what you might need in, say, 10 or 15 years from now, because are you going to need, you're not going to owe as much on your house, your kids are going to be older, you're not going to have daycare expenses,
right?
So you're not going to need to pay off quite as much.
Yeah, so usually that's what they'll tell you, is that like in the middle of your life, like your peak, if you do have kids and you just got started by bought a house, like everything usually happens, so like your expenses are like here, and then it goes down after, like when your kids grow older, or your mortgage decreases,
as people get older, their needs for life insurance or the amount that they need for life insurance decreases.
So anyways,
generally speaking,
and
not
like
always.
your life insurance advisor, financial planner can advise you based on your situation, right?
What's going to work best for you.
So that's basically the difference between mortgage life insurance and like
actual life insurance. Yeah.
So that probably covers, I think, most of it. So,
I think so, yeah.
Yeah, that's just a little tip for you guys to know. And if ever you have to make those decisions, but usually it's just like talk to the people that are experts in that.
Definitely talk to an expert about it. I mean,
financial. I like calling my financial advisor. He knows what's up.
Yeah, exactly.
I don't need to be an expert in it. He is. So
exactly.
I'll call him and he tells me what I need to do, and that's
and then we do what he says to do.
Yeah, pretty much. Cool. So
awesome.
Hopefully that helps.
Yeah.
All right. Awesome.
Okay, cool. Thank you.
Bye.